in the fiscal year 23-24, China has overtaken the US as India's largest and biggest trading partner. The total two-way commerce between India and China has come in at $118.4 billion. US came close second, with the bilateral trade between India and US coming in at $118.3 billion in 23-24. Now, India's export to China rose by 8.7% to $16.67 billion, while the imports increased barely 3.24% to about $101.7 billion. The trade imbalance is clear and visible. The imports from China are literally 5 times the export figures from India. The exports to China, in fact, include iron ore, cotton, yarn, fabrics, made-up handloom, spices, fruits and vegetables, and that entail an overall of $16 billion worth of export portfolio to China. Our guest Ajay Sahai, DG FIEO, will join us very, very shortly. Kartik, of course, here with me. Krishnakumar also joining us here in the studio. Kartik, this is an interesting conversation. It does really tell you that although there is a growth in export to China, the figure is still far, far lower compared to what we import from China, which is about $101 billion.
I think, to put it very, very simply, Shweta, what is it that India is producing, whether on the goods side or the services side, which China needs desperately, and India is the only trading partner which can supply it? You've really got to scratch your heads and run through a lot of research papers to discover that that list isn't very long. You have very, very few items where China finds it advantageous to import from India rather than build it, manufacture it or serve it itself. On the other side, India continues to be enormously dependent on China-made products and, I hate to say, even China-made services for that matter. So, talk about the biggest story right now for India's growth. We are all really talking about this electric mobility boom which is likely to come and hit India. While we are encouraging Indian companies and as well as global companies to come here and make in India as well as sell in India, a lot of components that go into them actually come from China. Electric mobility, the cars can be made here. Where does the battery come from? And, there are simple answers. Look at iPhones, for example. Apple, we've invited Apple to set up shop, double down on investments. 3 Taiwanese companies operating in India. In fact, one of them already bought by Tata Electronics, one more in the process of getting acquired. Where do all the other components come from? Not all the components are made in India. The iPhones are, yes, beautifully assembled here in India.
But where are the components really coming
China from? So the problem is we don't have a large enough vendor base which is in this intricate art of really designing high precision quality components which power up the machines of the world or power up the engines of the world. Now, unfortunately, our dependence on China continues to be, no matter what we want to do, fairly high.
Ajay Sahai joining us on the show. Ajay, thank you very much for taking time out. I think we've set the ball rolling as far as trade imbalance between India and China is concerned. My question to you in that case is, how do we mitigate this imbalance? How do we ensure that India becomes more self-reliant in some of these essential components, parts, goods, services that India is currently importing from China? How do we mitigate this imbalance?
If you look into what we are importing from China, it's by and large telecom equipment, parts of mobile phone, parts of electronics, machinery. To some extent, you can say some of the raw material also, organic chemical, plastic, iron, steel, and article of iron, steel. These 5 segments contribute to roughly 80% of the imports. In some of the critical technology sector, we already have the answer to the PLI scheme. In respect of mobile sector, I entirely agree with the panelists that though of course on the part and component, we have not yet developed the capability. When it comes to the mobile, probably the production figure are very encouraging. In FY21, we are producing mobile around 3,000 crore. Last year, we ended with 60,000 crore of mobile production. Probably in this year, it will touch 1,20,000 crore. Though, of course, we need to extend it to the parts and component manufacturing so that the net value addition goes up. So the PLI scheme definitely has been designed to address some of the rising import in critical sectors, and which will address to a large extent the import from China also. In some of the segment, for example, if you are looking into the APIs and others, we are now developing the capability. The first penicillin G manufacturing probably will start production from next year. So to some extent, the dependence will go down. One of the reasons for increasing trade deficit is, of course, the huge imports and not so good exports also. There are market access issues with the exports also, particularly in the pharma, agro and food processing sector and IT and IT technology, which at the bilateral level is being flagged, and I'm pretty sure in times to come that will also be addressed.
Okay, Ajay, I want to spend a minute on export side because we were discussing, very interestingly this morning as to where can India do better as far as bridging that trade deficit is concerned. Now, you said that there are challenges on the export side. Could you perhaps help us understand what are the components, products that India is currently exporting to China, and how do we really up that number?
No, in fact, if you are looking into the current profile of export, it's dominated by the raw material. It is iron ore, it's cotton yarn, some of the fruit products we are exporting, some of the spices are exporting, and polymers to a large extent. So 70% of my export is of the raw material, and that's why the value-added export is a big issue, and from that we require market access also. For example, in pharma we have the competitive edge, but then approval of the drugs in China is taking enormous time, and generally in a country, if we get the approval in 6 months' time, in China, it is taking 2 years and sometimes even more than that. So that's also an issue, but from the industry side also, we have to move up the value chain, look into exporting more value-added products to China, and probably that will reflect in better export numbers also.
All right, Ajay Sahai, thank you very much, sir, for taking time out. So throwing away essentially your Chinese mobile is not going to do away with the problem, whether we like it or not.